Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. Prime Minister Narendra Modi along with the Union Council of Ministers will be sworn in today at the Rashtrapati Bhavan at 7 p.m. The government is examining if promoters of Jet Airways are involved in financial irregularities as alleged against Vijay Mallya when he ran Kingfisher Airlines. West Coast Paper Mills will buy a controlling stake in the India unit of International Paper in a deal valued at 600 crore rupees. And 10 teams will battle it out for cricket's most prestigious prize. The ICC Cricket World Cup begins in England and Wales later today. Well, let's take a look at the trade setup for the world markets. No big cues coming in. I mean, you can argue that yes, the US markets did what they did in trade yesterday, and those numbers will come up on your screen, or how the Asian markets have started off today as well. So marginally lower in trade, less than 1% for all of the markets, and that's the similar picture in the rest of the Asian screen as well. Almost over 0.5% for each of these indices. But the SGX Nifty indicates a start which could be flattish to marginally in the green. It could be deceptive, but the point that I'm trying to make is it promises to be a flat start, maybe 0.5%, maybe 0.25%, maybe flat, completely flat at the start of the trading day today. Let's wait and watch. The only one good thing that is happening though, that when you speak to international experts about what to do in the emerging market pack at large, everybody's saying that there are bets starting to emerge. There's a Bloomberg chart which speaks about that based on the MACD indicators, how across the EM pack there are more buy signals than sell signals. The green is the green bars on your screen that you see, and those peaks that you see are the quantum of buy signals as per the MACD indicator in the emerging market pack. Similarly, the red bars are the quantum of negative signals, and as you can see, towards the current market period, the quantum of sell calls versus the quantum of buy calls has changed quite dramatically, with the green shooting up. So the buy signals are much higher than the sell signals in the EM pack at large. At some point of time, we'll talk about whether this is happening in India also or no. But for the emerging market pack at large, this is the picture. For India, frankly, the one big trigger or one big talking point aside of what's happening to equity markets, because equity markets have done what they have done, the one big talking point is what's happening to the money markets and what's happening to the yields, and much lower than what they were. The only interesting part is that we may want to think that India is an isolated case in point, but that's not the case. Remember, yesterday I was making a point about how Australia, New Zealand and a couple of other countries are showing this, but the Indian yields are moving exactly in tandem with what the yields globally are doing, and which is easing quite considerably, 7.12 or 7.13. And is there a case being made for some more downside on the yields? I think that's the big talking point. Frankly, every trade talk is about what's happening to yields, because that will determine what rates do, and therefore what rate sensitives do. That will determine what happens to the treasury portfolios of the PSU banks, and if those do well, then the sentiment improves. So all round, the question is the impact that the falling yields will have on a bunch of things, including borrowing costs and treasury gains for a bunch of companies across. Flows have tempered a bit. You must mention that though. The last couple of days have been a bit slow. In yesterday's session to a negative number, and if you just look at the last 4 days, now it's 2 days on a trot that we've had a small negative number from the FI side. A big positive on Tuesday at least, but Wednesday and Tuesday, the last couple of days, we've had some negative flows coming in. But all eyes will be on what specific companies do in the session today. Aside of course, what happens to large numbers, there are a couple of index companies coming out with numbers. The important thing is what some of the companies that have come out with numbers or news will do in the session today. So 3 or 4 names that I thought we should bring out. Adani Power, the top line numbers look very good, but operationally a very wobbly quarter. A 740 crore tax reversal ensured some profitability, but operationally it was a very weak quarter. EBITDA margins at about 9.1% from 30.9%. A low volume stock, Excel Crop Care, came out with pretty strong set of numbers. Revenues up 32%, EBITDA up 2.4 times, and the net profit at 4.7 crores versus a loss in the corresponding quarter last year. So that one could be interesting. And GNFC continues to disappoint. Yet another quarter which has been very, very wobbly for GNFC. Let's wait and watch if this reacts or no. Last but not the least, Agam will speak about it a bit later on, but this deal between International Paper and West Coast. And that's interesting, because while people will argue that how is it that they got the asset at such a lower price, the open offer, as Agam told me, is happening at a premium to the price, and therefore maybe not too many eyebrows raised. But as I said, Agam will speak more about both of these companies and the deal that has been struck yesterday. So I won't dwell too much on it, just that there might not be too much of a cause to worry. But we'll talk about this a bit later on. Let's tell you what's lined up on First Word today. It's a packed house. Yash Upadhyay first joins in to tell us about the monthly auto dealers survey and whether there have been any significant signs of recovery at all. We'll find out. Gujarat Gas may overtake its peers in this financial year. Sumit Sarkar joins us to tell us why. Larger real estate developers are back on their feet, shows last year's financials. Sharad Dubey will tell us all about that and whether what's changed. And which of the 10 teams set to lift the trophy in 2019 Cricket World Cup? We'll tell you what the bets are. Firstly, auto sales continue to drop across passenger vehicle and two-wheeler segments in May, according to a Bloomberg Quint survey of 7 dealers across the country. Higher insurance costs, change in emission norms, and liquidity issues faced by non-bank lenders continue to plague the industry. Yash Upadhyay is standing by with the survey findings. Yash, how's the month looking like?
It's almost same old same, like how we've been covering over the last few months. And in fact, I sound like a broken record over here because this is another month that most of the dealers are telling me that automakers could report a double-digit drop in volumes on a year-on-year basis. I'll start first with Maruti, and we'll go across the reasons which are impacting the four-wheeler as well as the two-wheeler space. Maruti could have a 15% fall in the monthly volumes for the month of May. Now, this would be particularly because of the fact that the cost of ownership has gone up significantly for cars as well as two-wheelers, mainly on account of the higher cost of the insurance, which has bumped up the price, which has bumped up the on-road price of cars as well as bikes to a certain extent, as well as the change in the emission and safety norms. Add to that the fact that the high base of last year, because of which we saw a huge number in excess of 170,000 units being sold in the May, and for most other players, could be a big deterrent. Going forward for M&M, for Maruti Suzuki, in fact, actually the key top sellers would be the likes of the new 2019 Wagoner. The walk-ins and the inquiries are the highest for this one, along with the Swift and Ciaz doing very well. The Ertiga remains one of the only cars in the entire MPV industry which has the highest ever waiting period of 22 weeks, is what we are gathering from the dealers. Moving on, when it comes to M&M, this one could see a slightly lesser drop on a year-on-year basis, and this is mainly on account of the new launches that the company has had. So about a 4% drop, and about 46,000 units is what is likely to be done by M&M. In terms of their top sellers, they include the likes of XUV 300 as well as the Scorpio. Now, keep in mind that the discounts that were there in the start of the year, they have come off significantly. They are not completely out of the system. They are there, but only on select models and on select variants. So that goes for M&M. Similarly, for Tata Motors, again, a big drop is what is expected, a 15% drop in volumes. 49,500 to 50,000 units is what they could likely do this time around. Amongst their top sellers is the likes of the Tata Harrier, as well as some of the other Tigor and Tiago variants. Tata Harrier continues to have a waiting period of 6 months, which is for their top-end model. And like I said, from M&M, there are discounts for select models as well as variants. Moving on to the two-wheeler space, Hero MotoCorp also had a high base of last year, and all the factors, including the likes of the higher insurance cost, the move to ABS as well as CBS for some of their bikes, and the fact that most of their entry-level bikes are also now starting to move on from carburetor engine to fuel-injected engines, is also a cause for concern, because they have increased the prices by anywhere between 5,000 to 10,000 rupees. As a result of which, we could see about a 15% drop in volumes for the month of May. Now, in the space of just 15 days, at the start of the month in May, they had come out with 3 new bikes in the 200cc space, and again on the 15th of May, they came out with 2 new scooters, which is the Pleasure Plus as well as the Maestro 125. So the new launches, they seem to be doing very well, is what the dealers are telling us. Moving on, when it comes to TVS Motors, Eicher Motors, Bajaj Auto is what we are talking about first. There could be a drop of about 2%. They have been doing fairly well over the last several months. In fact, it has been one name which has consistently delivered, which has been a key player. In terms of offers, they continue to offer the 555 offer, which is 5-year free insurance and service. Moving on, when it comes to TVS, Their scooter line continues to do very well. Their sales could see about a 3% drop, but nothing special as far as the discounts and offers are concerned. And lastly, when it comes to Royal Enfield, it could see a big drop of about 13 to 15%. 65,000 units is what they could likely do, and that is what they have been, sort of averaging over the last 4 to 5 months. And this is the kind of run rate that most of the dealers are anticipating in the absence of any discount and any festive offers as well.
Well, okay, Yash, were you wobbling between the companies because it's the brand that you want to buy?
No, not really.
Okay, so long story short, Yash, which is the one company that we should watch out for based on the basis of the dealer survey?
I would say more than one. I'll say Maruti and Royal Enfield, both of whom are likely to have a very bad month. And something that one very large dealer I spoke to has told me that this time around the monsoons would be the most important thing, and more than the farmers, the auto companies and the dealers are looking up to the skies because everything would depend on that. And the first half of the year is going to be extremely difficult for the companies.
Okay, one quick follow-up. Are any of the dealers talking about the passenger vehicle momentum for Tata Motors? Because frankly, on the streets now, we see a lot of Tata Motors cars in the commercial vehicle or the taxi space as well as the private space. Are people talking about that?
Absolutely, Neeraj. So the Tata dealerships took off absolutely very well because of the launch of Tata Nexon. And a key point to note over here is one of the unlisted players, which is Hyundai. They came out with the new car, which is the Hyundai Venue. It's priced aggressively at 7 lakh rupees, and it comes right in between of the Vitara Brezza as well as the Tata Nexon. So it is going to be a neck and neck fight in the compact SUV space. And the Tata Nexon, which has been consistently doing very well. In fact, it now features in the top 5 list of the compact SUVs on a monthly sales basis. It does about 15,000 units on a month. That would go on to hamper their sales. Is what is likely to happen.
Oh, excuse my knowledge. I thought Nexon was a small car. I didn't know it was being sold as an SUV.
It has been doing very well, actually.
Okay, yeah, it has certainly been doing very well. Okay, Yash, thanks so much for putting that into perspective. So, well, that's the dealer survey. And a lot of times, dealer conversations tend to throw up the most interesting bits that even analysts should watch out for. Monsoons may be very, very important for the car makers and maybe the two-wheeler companies as well. Moving on, Gujarat Gas has lagged behind its peers in the last quarter as far as volume growth is concerned. But the state-run city gas distribution company is expected to outpace some of the other distributors, at least in this financial year and the next, partly due to the National Green Tribunal order. Samit Sarkar is here to tell us why. What is so special about that order that will lead this company to do better than the peers? Samit.
Firstly, I'll start off with how the fourth quarter performance was for all the three city gas distribution, and then I'll go into what is expected to happen over the next 2 years.
Sure.
Now, if you see in the fourth quarter of financial year 2019, Indraprastha Gas outperformed its peers. Now, the numbers of the company were ahead of the analyst estimates, and that was because of a strong volume growth that the company reported in the fourth quarter of financial year 2019. But its unit margins, that is EBITDA per standard cubic meter, now that declined due to a greater share of industrial volumes and higher cost. Now, the volume growth for IGL was nearly 17%. That was at a multi-quarter high, but it was the only city gas distribution company to report a decline in its margins. But however, this won't matter much for the company because if the volume growths are expected to remain so high, then a marginal decline in its unit margins won't impact its EPS much. For MGL, if you see, the volume growth was nearly 7%, but it was at a slower rate compared to the earlier rates that we have seen, and that was because of lower CNG consumption, which was impacted due to strike by Best Buses. But its unit margins continued to grow even in this quarter on the back of pricing power that MGL has in Mumbai area. For Gujarat Gas, volumes declined by nearly 4%, and that was because of a tepid volume of offtake by industrials, but its unit margins expanded the most, nearly 19%, due to the price hikes and lower raw material prices that we had seen in the fourth quarter of financial year 2019. But it's now, however, going forward, if you see, Gujarat Gas is the only player which is expected to outperform its peers by a very large margin. Now, if you see over FY19 to FY21, Gujarat Gas is not only expected to report its highest volume growth, but its earnings are also expected to grow at a higher rate when compared to IGL and MGL. But despite this outperformance, the stock continues to trade at a discount to its nearest peer, that is Indraprastha Gas. Now, for compared to MGL, if you see, Gujarat Gas is trading at a premium, but that is because MGL is a very small player compared to Gujarat Gas. So its nearest peer is IGL, and compared to IGL, if you see, the company is still trading at a discount. Now the reason behind this is the volatility in the margins that we have seen for Gujarat Gas, and because of the inconsistent volume trajectory that Gujarat Gas has reported. Now if you see in the last 4 quarters, Gujarat Gas volumes have declined as much as 4%, but it has also given as much as 18%, and that's the kind of volatility that you can see in Gujarat Gas volume. And if you see unit margins, that is EBITDA per SCM, it has increased as much as 54% in the third quarter of financial year 2019, but in the previous quarter, that is the second quarter, it had declined as much as 32% for Gujarat Gas, and because of this inconsistency, there's this discount. But going forward, if you see, this is expected to remain stable because of the recent court order which has banned the use of polluting fuels in the Morbi region. Now, because of this move, so far in FY20, the volumes of the company have already moved up to 8.5 million metric standard cubic meter per day. That is the daily volume consumption that Gujarat Gas is seeing, and this is nearly 31% higher compared to the average volumes done by the company in financial year 2019. So this higher volumes is expected to result into a strong cash flow for the company, and obviously which will lead to a debt reduction and interest cost reduction for Gujarat Gas in the coming years, which will in turn boost its earnings per share going forward over FY19 to FY21. And that's the reason we are seeing this kind of higher growth for Gujarat Gas when it comes to volumes and its earnings per share.
Yeah, and I'm presuming because the earnings per share are also growing at a good pace, operationally they won't have to do any compromises in order to grow the top line growth at a faster pace.
That is still one concern, and if the company performs on that side, if the prices do remain stable for Gujarat Gas in the first half of financial year 2019, we can likely see a re-rating. That is what the brokerages are saying, and the analysts whom I spoke to were mentioning that if the volume growth and the pricing power remains for Gujarat Gas, at least in the first half of FY20, we could see a re-rating in the stock going forward.
So the first couple of quarters would be very keenly watched out for
very
Gujarat
important
Gas.
Because it was the recent order that has come in. So we'll have to see, because largely if you see in Morbi region, the players are very much unorganized, and if there's a hike in prices and if they're not and if their business is not viable, they might as well shut down their business. So volume growth will be the key important factor to watch out for, at least for the first half of financial year 2020.
Okay, let's wait and watch. Very interesting that the street already knows that here is a company that potentially will outpace its peers, but still have to wait for the first couple of quarters in order to see what's the quality and the granularity of the growth. So, thanks so much for putting that into perspective. Well, from gas to real estate, that sector has had more than its fair share of turmoil over the last few years, and while not all players are out of the woods as yet, at least some of the larger ones were back on their feet in the last financial year. So what's changed? Sharad Dubey is here with that answer. Sharad, good morning.
Good morning, Neeraj. The realty companies have really come out with a good set of numbers for the March quarter, and the revenues have actually increased from 2 times to 5 times, on a year-on-year basis. Now, the two main reasons which I have taken out is the revenue recognition, which was seen due to the new accounting norms coming in for Ind AS 115. And the second point is there has been a thrust in affordable housing, which has led to better operational numbers for the select developers. Now, you see the bump in numbers, especially in the revenues for DLF, Prestige and Sobha. Almost the revenues have doubled compared to the last year's numbers. And also, if you see, there has been a similar jack in the top line numbers for Godrej Properties, Brigade and Oberoi Realty, with Godrej Properties numbers rising almost 5 times. Now, if you see Godrej Properties, it gave its best operational performance with almost 6 new launches, and also the developer sold around 2,900 homes, and the area sales rose by almost 2.5 times to 3.7 million square feet, and the booking value crossed almost 2,100 crore odd rupees, which is so far the best operational quarter. Up next, we are having Sobha, which produced also a very good stellar operational quarter, with the real estate and the contractual manufacturing segment beating analyst estimates, as the company achieved its highest pre-sales of around 1.13 million square feet, with a booking value of around 920 odd crore rupees. These launches were actually concentrated in the Bangalore region. Up next, we are having Brigade Enterprises, which also came out with a good set of top-line numbers, and the volume growth was almost 0.9 million square feet, and the margins expanded by almost more than 10%, as the hospitality segment and the leasing segments margins also increased by around 22 to 36 odd %. Up next, we are having Prestige Estate Projects, which saw a marginal increase of around 7% in its top-line growth, but their margins expanded to 25% due to reduction in facility management expenses. The sales volume actually increased by almost 34%, but I would like to point out one thing, that the sales realization that fell by around 20% to around 5,400 rupees per square feet. Apart from this, Oberoi Realty came out with also a good set of operational numbers, but the revenue is higher by almost 133 crore because of the Ind AS impact, and also the top line grew by around 30% due to higher booking seen from its Borivali project and also higher sales volume from the Oberoi Esquire project. Apart from this, DLF reported steady numbers as stable occupancy was seen from its commercial projects, and also the Ind AS adjustment was there, out of which the company's revenue rose by almost 1,300 odd crore rupees. But amongst all these Ind AS adjustments, Neeraj, we see that India Bulls Real Estate's revenue actually fell by 1,382 odd crore rupees, and there was actually a decline in the revenue numbers. So all in all, I had a chat with the industry analysts. They told that there's a consolidation happening in the industry, which would really be auguring well for the industry as a whole.
Okay, Sharad, just one quick question.
Yeah.
After all of these numbers that have come out, which of the companies are the analysts most bullish on?
Godrej Properties analysts are most bullish on, and also Sobha, because there's a lot of traction happening in the Bangalore market itself.
Okay.
And especially, I had a chat with analysts and they told that even in the segment of your premium segment, the traction has started to happen. So that is something new trend which I came across, and when you compare it with the other main top cities.
Okay, Sharad, thanks so much for putting that into perspective. Keep in mind that the ANR on the Bloomberg terminal might still show the return potential for a Godrej property is lower than maybe some of the other companies, but by and large, when you speak to fund managers, portfolio managers, all of them are more comfortable buying into Godrej Properties and Oberoi or a Sobha, maybe even a Brigade thrown in there as opposed to some of the others. The one dark horse though, when I spoke to a lot of guests post the election verdict in the real estate space, seems to be DLF. So keep that at the back of your mind. Moving on, Prime Minister Modi and his cabinet colleagues will take oath at the Rashtrapati Bhavan today. The president will administer the oath in the presence of various chief ministers and leaders of the BIMSTEC member nations, which includes neighbors like Sri Lanka, Nepal, Bangladesh, Bhutan, Thailand and Myanmar. The ministerial allocations will be made official only after the swearing-in ceremony is over by the President's office on advice from the Prime Minister. While a large number of sitting ministers are likely to make it back into the cabinet, remember, as all of you know, Finance Minister Arun Jaitley has chosen to opt out, citing ill health. Modi called upon Jaitley last evening to try and convince him to reconsider his decision. This is according to reports. His succession will have to present a budget within months of taking charge, as the last one was just an interim budget. So 7 p.m. today, a very important thing. Okay, the last piece, a bit of a fun fact. It happens once in 4 years, giving the winner bragging rights for years to come, and not just for the next 4 years. The ICC World Cup, Cricket World Cup, begins today with the host England taking on South Africa. It's a big change in the tournament though, with the round-robin format coming back for the group stages. Remember, if I'm not wrong, it had last happened way back in 1992. So the question is, who do the betting meters predict will be the best bowlers, who will be the best batsmen, and which is the team that is the favorite to lift the World Cup? Just a small analysis on the basis of the bets that have been placed. So let's first bring up the list of the bowlers. Should we do that? Should we start off with the bowlers? Yeah, let's start off with the bowlers. And one heartening bit for almost everybody who is an Indian fan is that the number one, the least bets or the least returns, and therefore the highest bets, are being laid on Jasprit Bumrah as being the number one bowler. 13.33 is the average of the bets or the rates that are placed on Jasprit Bumrah. These are amongst from the three sites that I've taken, an average of 3 betting websites, which is Bet365, Ladbrokes, as well as Betway. There is no reason why I've chosen these 3. There could be others too, but this is on the basis of what I thought were the most popular websites to bet on in the current format. Kagiso Rabada comes in a close second with Trent Bolt, but it shows that the top 3 bets are being placed on pacers in England, despite the fact that wrist spinners have made a big comeback in reckoning in this World Cup. So Adil Rashid, who's arguably been the most successful wicket taker in the run-up in the last 1 year to the World Cup, is at number 4 when it comes to bets being placed. Then followed by Mitchell Starc, Pat Cummins, and Jofra Archer, who's, well, I mean, we saw his exploits in the IPL this time around. Not too many people knew about Jofra Archer about a year ago, but he's right up there, filling in the missing piece in England's lineup. So it's a pace bowling dominated betting that we're seeing as far as the bowlers go, with only one spinner, which is Adil Rashid, making in. I must say, the likes of Yuzvendra Chahal and Kuldeep Yadav are there in the reckoning in the top 15, but don't quite make it there. The ones who've closely missed out from the top 7 or top 8 are Imran Tahir, the leg spinner from South Africa, as well as the Afghan sensation Rashid Khan. So those two leg spinners just about missed out from the top 10 spot. But it's essentially a pace bowler dominated betting meter. The bets don't favor two key pacers though, and that's the interesting bit that I thought. Lasith Malinga and Dale Steyn. Now, Malinga was a revelation in this year's IPL. He gave runs, but he took wickets. He won Mumbai Indians in the final. One would have thought that maybe those exploits would have led to the betting meter being more bullish on him, but not quite. These are the average of the bets from amongst the three sides. Lasith Malinga, 54. 1:54. You will get 54 rupees if you bet 1 rupee on Lasith Malinga. Similarly for Dale Steyn, the bets are as low as 50. Now compare that to Jasprit Bumrah's 13, and you know how the difference is. Now moving on to batsmen. And again, an Indian at the top of the list. This, again, not a surprise, Virat Kohli. But the key is look at the difference between Kohli and the second place batsman, which is Johnny Bairstow. Now, between Bairstow and Warner, there's a bit of a to and fro. Some sites bet on Warner as having a higher rating compared to Bairstow. But essentially, the average suggests that Virat Kohli is number 1 at 7.5 for 2 rupee. Johnny Bairstow, 10.33. David Warner about 11.33, Joe Root and Jason Roy, which shows that the top 5 is dominated by English batsmen. No wonder that they are considered one of the favorites. So the top 5 dominated by English batsmen, Virat Kohli the lone Indian. And then as you look at the next 3, there is Rohit Sharma, again the Indian opener, right there at about 15.33. Quinton de Kock, one of the few wicketkeeper batsmen to make it to this list at 16, and then Kane Williamson at about 17.33. So these are the top 8 batsmen. Again, as per averages from Bet365, Ladbrokes, as well as Betway. The batsmen which don't favor amongst the list of the top rated batsmen in this, as per as the bookies are, or the betting sites, are these 3: Josh Butler, Andre Russell and Hardik Pandya. Now you can argue that Hardik Pandya comes way later and therefore he may strike a quick fire 30-40 but may not be the top scorer and therefore not a clear favorite. But Andre Russell, set the IPL on fire, somehow way lower than Virat Kohli's 7.5, 10 times lower than Virat Kohli's 7.5, or 10 times higher the returns as compared to Kohli's 7.5. But the surprise is Josh Butler, arguably considered as one of the most destructive batsmen in the recent times. Butler is way behind at 26. So if you bet 1 rupee on Butler as amongst the top batsmen, well, you get 26. But well, that's that one big surprise according to me. But the one big thing that everybody would want to know, that who are bookies or what are the betting sites betting on as amongst the most favorite team in this World Cup. And that is what the bets are. So Australia, or rather New Zealand at 10.5, the average. Then South Africa at 10. The Australian cricket team at 4.5. This is the average of 3 sides, remember. It could vary if you take 10 or 9 or 8. India at 4.12. But a dominant favorite amongst websites, amongst cricket pundits, and almost everybody else is England. After a really long time, you're seeing the English team go into the World Cup as an overwhelming favorite. The only respite for an Indian fan is I was reading a BBC website article, and it said that England are favorite to win the World Cup and they will definitely do very, very well. What can stop this English juggernaut? And then they had a picture of Virat Kohli saying this man can do that. It was not about a team which can stop England. It was about one player which can stop England. So all you Virat Kohli fans, well, some reasons to rejoice. That's all that we have on First Word today. But we'll move on back to markets from World Cup, discuss markets and macros with Vikas Khemani of Carnelian Capital Advisors, get a very important global view on the Indian markets from Teresa Barger of Kartika Capital Management, and then talk about the rally in the debt markets with Lakshmi Iyer of Kotak Mahindra AMC. After this break, though, a full tilt towards the day's trade.